Hey, Bulls and Bears, welcome to another episode, another report, back with another dose of economic reality. My name is JJ, and you're watching Bull Boom Bear Bust. Today was an amazing day in the markets for me, hopefully for you as well. I just sold off some investments that went up about 50% since October, and I'm talking about cryptos. So cryptos were beaten down for a long time. Remember the huge run up we had, and then pretty much all the cryptos took a dive and they were down for a long time. I went ahead and bought over the past over a year now. I've been buying, buying, buying. Same thing with silver. Same thing with a few different stocks, gold miner stocks. And today I'm up over 50%. So I took some off the table, not all, but off the table by any means. But it was a very good day in the markets for me. So I hope you all had a good day. Thanks everybody for your support here in this channel, for your donations and everything, and give me a little more to invest with. So I really appreciate it. Actually, I used to invest a lot more before I started doing this channel because doing these videos takes up a lot of the time that I used to spend researching stocks and stuff like that. So now I don't invest as much, but I am more cautious and careful about what I invest in. So thanks to everybody out there for supporting me. And today was a beautiful day in the markets, right? It's not all about money, but it is nice to try to uh, play within the game, right? The game that we all know where the stock market can go up at the click of a mouse. They could bring this market up to all-time highs tomorrow. Well, tomorrow's Saturday. They could bring it up to all-time highs the next trading day if they wanted to at the click of a mouse. Why? Because it's all digital currency created out of thin air or on a digital screen. Some people call it out of thin air. It's more digital on a computer screen somewhere, on a hard drive somewhere, basically at the click of a mouse. And for all the evidence you need here, let's take a look at what the stock market's been up to lately. 6 straight weeks of gains in the stock market with consumers living on a financial cliff right now. Most people living paycheck to paycheck, record levels of debt, consumers buried under debt, all types of loans, increasing delinquencies right now, but yet the stock market hits all-time highs. That should show you the detachment between the Wall Street economy and Main Street or the people's economy, right? Completely detached. The stock market could go to all-time highs as you see bankruptcies amongst consumers go to all-time highs at the same time. Completely opposite worlds there, right? Why? Because I'll give you a couple numbers here. The top 1% own 50% of all stocks. The top 10% of income earners or wealth, uh, the wealth bracket, own about 90% of all stocks, right? Crazy. So when you see the stock market go up, does it mean that the economy is doing good, or does it mean that a small fraction, a small percentage of the population is doing good? And I hope you are making gains too, but for the most part, it's the big money that makes the most money when the markets go up. And let's talk about investing just for a minute here. It's all about when you buy and when you sell, right? So if you buy something and it goes down, you're underwater. Just look at all the banks right now with their underwater securities, about 600 and something $billion in underwater securities with the banks. And compare that to, let's say, the bailouts, the bank bailouts of 2007, 2008. Those were about $700 billion. So now banks are almost seeing losses as big as the entirety of the bailouts from 2007, 2008, mostly at the end of 2008. But my point is, it's a big number. It just hasn't been realized. So if banks are forced to sell off these bonds at the suppressed prices right now, that's when they realize the loss, right? So it doesn't mean the banks are going to default necessarily unless the regulators come in and enforce some of this nonsense that's been going on, or changing some of the nonsense that's been going on. As most of you know, but I try to remind everybody here that the banks don't have to have any money in deposits or in reserves to be able to loan it out. Well, lawmakers are looking to change that. So that's going to be a huge, huge swing if that were to happen. Now, I seriously doubt it's going to happen because the lawmakers are going to be in big trouble if that happens, because their wealth, which a lot of them have tied up in stocks, is going to evaporate, because you're going to see an economic downturn like you've never seen before if that type of change were to be done to the banks, right? So I don't expect anything major to come out of the bank regulation side of things. Other things could happen, black swan events. So I'm always on the lookout for a market drop. I'm not predicting that. I'm just saying I always have that in the back of my mind. Always be prepared for that. And just think about that. If you're prepared for something and it never happens, that's great. But I have most of my money out of the banks right now. Even the money I have invested online and online platforms like Robinhood and stuff like that, stockbrokers, are just a small fraction of my overall money that I have, just because I want to have that safety net set aside. So I try to do both things. People often call me a bear or say that I'm doomish or gloomish on the economy. I'm not doomish or gloomish on the Wall Street economy. It can boom again at the click of a mouse. They can bring this market Dow Jones up to 40,000 if they want to. Of course, they're not going to do anything that drastic because that would be too obvious. Because that would be like a record-breaking increase in stocks, in this short amount of time. But they could do it technically. There's no limit to the amount of money they can pump into the system here. And if anybody thinks there's a limit, tell me down in comments what the limit is, right? There's no limit. Ever since 1971, the dollar can be created in infinite amounts. That's why people that are shocked at the amounts of debt, let's say the national debt, 33 trillion, 34 trillion, close to that. If that's shocking to you, why is that shocking? There's no limit on the amount of debt they can accumulate or they can create. Just look at what the U.S. has been doing. The U.S. has been borrowing money and paying interest against that money. We're going to be paying $1 trillion a year here just in interest on the national debt as a country here in the next, probably in the next year if the things continue at the current pace, right? So pretty insane. Well, let's get into some other news here real quick. We're talking about U.S. jobs, aka payrolls, and the unemployment numbers here. And on the surface, these numbers don't look too bad, do they? 199,000 payrolls added in November. Unemployment rate fell to 3.7%. But here's the real backstory to it. The numbers that came out in September have already been downward revised. In other words, the numbers that we're looking at today may be revised here in the next month or two downward. That's what they've been doing. So why can't they just wait to give us the numbers until they get the accurate numbers, right? So these could be right, but they could be way off. We'll have to wait a couple months here to see if they're going to be downward revised. But let's say they are correct or close to correct. 199,000 jobs added. How good is that? Well, you may think it's okay until you see the following statistic here. Of those just under 200,000 jobs, about 25% of those was government jobs. Healthcare was the biggest. Jobs added 77,000. Government jobs 49,000, just under 50,000 of that 200,000. So roughly 25% of the jobs created, government jobs. Is that a sign of a good economy, or is that a sign of weakness? When government jobs have to take up so much of the jobs added, to me it looks like a sign of weakness. And also look at the unemployment numbers. The unemployment numbers are basically eclipsing the jobs added numbers, right? You're not going to be told that, though. They're not going to really put that in the front page news, are they? But let's take a look at some recent numbers here in the unemployment field here. Now remember this payrolls number, 199,000 for the whole month. So let's say 200,000 for the whole month. How does that stack up compared to jobless filings? Recent AP article tells us here the numbers. The number of jobless filings for 1 week, unemployment benefit claims rose by 1,000 to 220,000 for the week. You see that? Let me bring up the big screen here. 220,000 for the week. So we're over 800,000 unemployment filings for the month, but we're supposed to celebrate 199,000 jobs added, and 25% of those are government jobs, and they may be revised downward in a couple months, just like we saw what happened in September. So it could be much worse than what I'm reporting. So tell me how that is good news. Maybe it is good news to you. Please let me know down in the comments if that's good news. But when you're losing 4 times the amount of jobs that you're adding, typically that's not good. Now, a lot of these people that lost jobs, of course, they'll go out and get other jobs, and that gets put into the jobs added category, right? And some people are getting second jobs and third jobs and part-time jobs, and that gets added to the jobs added number. So imagine if we didn't count the government jobs. Imagine if we didn't count the second jobs and the part-time jobs. How much worse would it be? Would we be adding even 100,000 jobs? Would it be 100,000 jobs added versus 800,000 new unemployed? And you look at the number of people out of the labor force, and it hasn't recovered, especially since 2020. So a lot of these numbers are very, very deceptive and, fraudulent if you really think about, the way they're being reported. There's a reason they only report unemployment the main number that comes out for unemployment. There's a reason why they only do it on a weekly basis, because they would be reporting between 800 and a million every month, and then people would be scratching their heads like 800 and a million versus only 200,000 jobs added. People would start connecting the dots more easily. So of course they're not going to report it in an even way. Let's get into some other news here real quick though. And let's talk about credit card debt. Now, I think most of you know that credit card debt's at an all-time high. Consumers are living on borrowed money, living on credit cards. If credit card companies and banks were to decrease credit limits, you'd see a lot of people in a very uh, life or death situation. People would literally be starving because so many people live off credit cards right now, including making their grocery purchases on credit cards. But listen to this out of Investopedia here, recent article. Revolving debt, mainly credit cards, rose by $2.9 billion, another new record high, of course, to $1.3 trillion. But the article gives us a chart, and this chart is the increase in credit card debt. And you see pretty much every month over the past few years, it goes up. Rare exception where it goes down. But the amount that it's going up here in the last couple months has been lower, indicating, are people getting close to being maxed out, or are many people already maxed out? And that's why we're seeing the big slowdown, right? So even with higher prices and inflation, we're still seeing deceleration now in the increase in credit card debt. So very interesting. Are people starting to pull back because they're approaching their credit limits? Are people cutting back on wants and only buying things they need? Are people being more discretionary about their spending, in other words? So that's what it looks like. We'll have to keep an eye on it here. Remember, this is all about the banks. It's all about the banks. If the banks keep credit limits increased, or keep increasing credit limits rather, you'll see this economy um, keep moving along very slowly, just like it is right now. Awful numbers, but it'll keep going. You won't see any implosion. If the banks don't increase or decrease the credit limits, it's over, folks. You're going to see Mad Max overnight, where you think the looting and the stealing and the theft is bad now. When the credit card limits stop increasing, folks, that's when the you know what hits the fan. And you better have your preparations in order, because the world's going to be a pretty nasty place, including right here in the USA. You know, this whole standard of living we have right now is based on debt right now. That's what it's based on. All right. So having the capability of racking up endless amounts of debt, borrowing endless amounts of money, the government, anyways, that's what enables the U.S. to give us the standard of living that we have. People always say, oh, the U.S. is the best place to be. Of course it is. When you have an endless credit card as a nation, the standard of living is going to be pretty good. But even though it's been pretty good, it's declining. And it's declining even with all this debt accumulation. Imagine when the debt stops. When the debt stops, um, your lifestyle drops, basically, to try to make a rhyme out of it. I don't know if I can think of a better rhyming word. When the debt stops, the good times stop with it. Or when the debt drops, the good times stop. Whatever way you want to put it. Let me know down in the comment a better saying for that one here. Well, let's get into some other information here, because I've got a lot of news pulled up I want to get to today. Oh, and quick note, with the gains that I've made here in my recent investments that I discussed at the beginning of the video, I'll likely do a little bit of shopping. I like to shop just like many people like to shop. And we've got Burlington Coat Factory here. They're open until midnight. So that's going to be my little Friday night venture here tonight, is midnight shopping at Burlington Coat Factory, right? Woohoo! No clubs for me, no dance parties, just little late night shopping, a little dining too, maybe dinner, just a little celebration for making some money in the market. But part of the cash, or part of the gains, I'll be setting aside to invest in the next thing that comes up, whatever it is. I'll use some of it to buy silver. I continue to accumulate silver. I still think it's a good time to buy. And just wait until the dollar gets crushed, even worse than it is right now. Gold and silver, you're going to be so happy, just like crypto investors were happy today. Gold and silver holders of gold and silver, the investors are going to be really happy down the road when this dollar starts to implode. And we do still see de-dollarization. It's happening very slowly. Yes, the dollar is strong compared to these other fiat currencies, but when you compare it to a hard asset, gold or silver, the dollar's rapidly losing its value. Now, on top of that, we've got other countries turning their back on the dollar and trading outside of the dollar. So it's going to get very interesting for precious metals in the near future. So I'm still stacking that. And if you're still stacking and you're waiting for it to happen, you may have a little bit to wait still, but you're going to be rewarded for your patience. Just like look at crypto. Crypto sold off big time, and if you would have bought at a high number, let's say Bitcoin 68,000, you would have been hurting for the last couple of years because the big drop. So that's why I always try to mention, the way I invest, which has done pretty well for me. I wait until there's a huge drop and then I start buying. And sometimes you have to wait a while after the drop. And there were assets that I bought, stocks that I bought that drop even more after I bought them. But then if you still have cash on the side, you could buy a little more, a little more. The cheaper it gets, buy a little more. And pretty soon it'll take off. And pretty soon it'll ultimately take off. And let's just look at the stock market. Every drop in the stock market has recovered and then went on to all-time highs. Look at the drop in 2020. Look at the drop in 2000. Look at the drop in 2008. Stock market's recovered every time. All right, so a lot of this investing game is patience and having something to invest when the good buying opportunities come up. In other words, when the market drops, having cash readily available or having something available to invest. If you're all in, and let's say you went all in on Bitcoin at 68,000, what, a year and a half ago, um, you're hurting because you had to wait all this time to get your money back or to get back to where you bought at. That's why I think the best time to buy is after a big drop. That's just the way I invest. It's been pretty good strategy for me, actually. All right. Here's something else I wanted to get into. Look who's profiting. We know that utility costs, energy costs are up. Your utility bill, your light bill is probably up. Excess profits at big energy and consumer companies pushed up inflation. So a lot of this is based on greed. All right. All companies are being pushed to pay more to their employees. So that's part of it. But when you see profits, record profits, you know that they're making more than they really need to or have to. And you know it's a lot more than just having to pay their employees more. And you know it's a lot more than just the higher cost of living and the higher operational costs because of the cost of living being so high. Should energy companies be in this for profit? That's, I think, an argument that's out there. New research argues that the impact of companies maintaining margins by passing on higher prices to consumers should not be overlooked as a contributing factor to inflation. So obviously, greed is part of this, but we have a government that can rack up endless amounts of debt for war, for foreign aid, for all kinds of things, but we still have to pay these companies energy bills or pay our monthly energy bills to companies that are in this for profit. And when you see how much these CEOs make, it's absolutely, in my opinion, it's absurd. It's absurd that we have public utilities making this much profit. And some of you out there may be saying, well, that's business, that's capitalism. They should be able to raise their rates no matter what. Here's the problem with utilities. How many options do you have if the price goes too high? Let's say they double your bill or triple your bill. Is that fair? Because where else are you going to get your energy from? And the same thing goes for a lot of utilities. Not many options in cable TV, not many options in internet. I think people can live without cable TV, but internet, not so much. I couldn't live without internet. Unless it came down to a survival situation, I would be very, very depressed, I think, if I had to go off grid. But I mean, if it comes down to survival, if we see Mad Max, if we see the credit limits drop and all the store shelves get cleaned out because no one can afford food anymore, being off grid and being out somewhere, even without internet, it's going to be, the way to go. I've got a small plot of land that I'll take off to. It's what hits the fan plan type of place where I wouldn't want to, be there for that long. But if it came to survival, got a little, not even an acre up in the mountains up here in California that we'll go to. And it's not even easy to get to. You got to go down like this 2-track trail, and hopefully there won't be snow because it is elevated, and it wouldn't be a fun place to camp. But if it came down to survival, that's what it's going to be down to. So anyways, let's get into one more thing here before we wrap this up here. And people say that I don't have much good news. Here's some good news. U.S. natural gas inventories, the highest since the start of winter in 2020. So hopefully we'll see some lower prices of natural gas as the inventories are the highest that we've seen in several years. So there's the good news for today, folks. Don't say that I don't have good news. You're wrong. Sometimes there's good news. And even what some consider bad news is really good news. All right. So back to the beginning of the video, we talked about how the job numbers are really bad compared to how many people are filing unemployment benefits. Right. So to you, if you're waiting for a recession and waiting for prices to come down, that's good news. Right. Because you're more likely to have a recession when these types of things keep occurring, when so many people are filing jobless claims, when debt is exploding. Ultimately, there's going to be an economic downturn. And if you're looking for deflation and a lower cost of living, you need a correction. You need a recession to happen. So, will the banks let that happen, or will they keep on letting people borrow endless amounts of money and we never see a correction? What do you think? Please let me know down in the comments. I'll be reading your comments. And I want to thank every one of you for being here. Thanks for your support, your super thanks, your chats, everything else. Bye for now, everybody. Big love. Keep stacking peace.